Hey guys, happy Sunday and welcome to another webinar. Today's webinar is going to be quite short because I've gone through some assets and I've looked at the COT report. And from what I can see on the COT report and the alignment with the seasonality, it doesn't really look that good. But before we get started, just a few disclaimer. This is for educational purposes only. I'm just saying my own perspective to the market. And I'm showing you the tools that I use that we've created and we see that's worked and given us a good success rate. Nevertheless, if you're new to the channel, welcome and we're happy to have you here. So before I begin, we have three strategies. One is called COT. We go seasonality. So basically, all three has to align. Without the alignment in all three of this, we don't take the trade. So COT is commitment of traders report, and it looks something like this, right? We have three categories in the COT. We have the non-commercials, commercials, and non-reportable. And long and short can be attained by non-commercials, commercials, and non-reportable, meaning you can either take a long or short position, long or short position, or long or short position, you know, in whichever category it is. Now, for the sake of me not confusing you further, non-commercials are people like you and I, retail traders, some institutional traders are in this category, while commercial traders are industries that need these assets. For example, if you're producing mobile phones and you need to buy gold and you're, trading with China, and let's say you're somewhere in the EU, you would need their local currency right there. So you might now go to the manufacturer and say, look, I'm looking to buy 1 ton of gold by, for that to be delivered to me by December. And I want to pay for it right now. So they go into the market and say, okay, this is the price of €1, £1, one whatever currency to our local currency, and this is how much we're selling this goods on our local currency. So pay us this amount of money, and in December we give you your goods. Now, what's happening is, what if you pay for that money now when your local currency, let's say, is 1 to 1 with them, and in the future, your local currency is now 1 to 2 in their currency, meaning that their currency has devalued. If you paid them, let's say, $1 million right now, and in December, that same million is now worth 2 million, you feel like you've lost, $1 million because of basically paying for that price right now. So what these guys do is they find a clever way to know when the market is going to move in their favor. They're not necessarily looking to make money from the movement up and down, but they're looking to make money from the, how do I call this, from the kind of forecasting, not really forecasting, but maybe speculating. I don't know what to call it specifically right now. So they make their money by saving money. So they want to get the best value for their money. So if I know I can buy something £1 right now, and if I buy it tomorrow, it's going to be £1.20, I'll buy it right now. So they always try to look for why or what the exact price will be, or what will be the best value for their stuff will be. And because of that, we tend to follow these categories, the commercials. So non-reportables, I don't really pay attention to that. So we follow them, and they either go long or short. Long means just buy, short means sell. So now from this COT report, what we mainly look at is the changes. Right, we look at these figures right here. We don't really pay attention to any of these right here. We just look at this right here. So the changes is, if this is bigger than this, ideally this is green, that's red, it means they're going up. But you have to look, they have to have a significant amount that they're putting in there. So in this case, CHF, we have that going long, which is going to put CHF long, because there's more position going long, it's bigger than that. And then this euro, they're also going long. Now, seasonality is just what it means. It's a season. There's 4 seasons right here. So there's winter, summer, autumn, and spring. And market has Q1, Q2, Q3, Q4. And market behaves different way in each seasons. So if we know that these guys are going long, for example, and we know it's a season for the market to go long, it makes more sense that we should position ourselves long, because it shows that these people are already buying towards that direction, right? So let's start off with euro. Let's look at it. Okay, so this is what a seasonality looks like. You have 3 years, so you have 5 years average, 15 years average, and 24 years average, right? And what we look for is when they're all aligned together like so, and they move. We don't look for small moves like this. We look for massive moves like this, ones that we can capitalize on for a long time. So right now we are somewhere around here. So this is us right here today, right here. From the 5 years, we can see it's going up, but from the 15 and 24 years, it seems like it's going down. So the long that we have for euro is no longer in play, because if the seasonality is saying we should go down and the COT is saying we should go up, then there's no alignment there. So it's not worth the trade. Also, I'm actually thinking about how to utilize AI for trading, because we already have an EA that we used to trade, but there's a possibility of having AI to, work it out. But I don't know what the possibility of AI is yet. It's something, we're yet to research into. But if there is a possibility for that, then it might just be something that we might look into in the near future. Nevertheless, though, let's see how this goes. So now we're on the 8th. Not 8th, on the 6th of 8th. All right. Same thing. So we're looking for long. 5 years is showing long, but the 15 and 45 years is saying short. But the long might come in next week around this period right here on the 14th. No, not next week, the week after. So we might have that going long. The week after Monday. So we might have to come to look at that. So what we can see, CHF also is not good to play. So if we see those assets are not good to play that guy, we just stay away from the market till we find an alignment. The next CO2 will be coming out in roughly about 2 days. So when it comes out, we look back into it. If there's an alignment, then we just take the alignment. We take it. If it's now saying short, for example, then we can take the euro trade, for example, or whichever trade that finds a line, we find alignment in, right? So that's all I have for you today. But as I said, we might probably be looking at AI very soon. If you want to know how to utilize this cool tool, you want to know more about it, you can visit the website. It's somewhere in the description, but I'm just going to copy and paste it right here for you. And you can go to business.devempire.co.uk/pricing. So thank you, and have a wonderful trading session ahead of you this week, and trade safe and be blessed. Take care, guys, and catch you in the next one.